overnight with oil prices yesterday. I don't know, in any other time of the century, you might have called it a collapse in oil prices when they dropped by over $10, by over 10%. A little bit up this morning, it has to be said, in early Asian trade. But let's kick off with Neil Atkinson, former head of Oil Markets Division at the International Energy Agency, and try to get his insights as to why we would see such a big move downward on relatively little headline that the UAE will talking about maybe increasing supply, and yet we saw such a massive drop. What does that tell you, Neil? Good morning.
Good morning, Sean, and good morning to everybody. Well, the market is still thrashing about, trying to take in the impact of the Russian invasion of Ukraine and what it means for everybody. Just looking at the perhaps the narrow aspect here of the oil prices you're suggesting, it could well indicate that on the demand side, the pressures of rising demand, which we've been looking at for 2022 as the global economies emerge from the pandemic, those pressures are not as severe as we might have thought previously. Plus the fact that still, as of today, the 10th of March, there is still plenty of supply in the market. Russian exports have indeed actually started to fall because of the actions of traders and some oil companies, but the supply still seems to be there, which is not to say that the situation is not going to get tighter as we move further forward, which is why the initiative taken by the UAE in the last day or so that you alluded to in your opening remarks is quite significant. So, the market's all over the place. We had very sharp increases on news items, and we've had now a small pullback. You could call it a correction on another news item, which is the UAE. So let's see what my colleagues think about this as well.
Well, let's welcome Walter Simpson, Managing Director of CC Energy Development, an oil operator in Oman. Walter, what do you draw from this? Obviously, we've been in very volatile waters now since and maybe even before the invasion of Ukraine, but nonetheless, serious swing. It's interesting that the market seems to have an appetite to move to the downside, given the context. But what do you take away from this headline, this development?
Well, good morning, everybody, first. I'm not sure it was a surprise that the reaction came that way myself. There is excess supply available to OPEC. They're clearly seeing the pressures and a key member of the solidarity they've had over the last couple of years facing sanctions. And they really don't want to price at $120. I mean, I'm not sure it does anybody any favors at that high price for the long term anyway. So I don't think it's a surprise they'll be looking to put more oil into the market. Clearly, they've got to convince other members of OPEC, particularly Saudi, but I think it's likely they will. And I think the markets are expecting that, which is why it dropped. So, yeah, no big surprise in my view.
Let's go to our third speaker before we're going to come back on some of those comments and welcome Daniel Rahmat, Senior Energy Security Consultant based in Tehran. Of course, you're a bit like waiting for Godot at this stage, Daniel, because the other sort of indicator that to the bearish side of oil prices, if you like, the cavalry coming over the hill, may be the new Iranian oil supply returning to the market after a nuclear deal in Vienna. Let's just focus in on that particular supply opportunity. How does that look like to you at this time? It seems the deal was close, but hit another major roadblock with Russia.
Hello, everybody. Regarding the Vienna talks, I think based on the latest news coming from Vienna, the final agreement is somehow finalized between two sides, but probably Russia is trying to use its leverage in these negotiations to get some advantages. Probably they want to secure their interest in Iran or doing business with this country. Maybe they want to weaken the US sanctions. imposed on them because of their invasion on Ukraine. But I think Iranian oil, as I have told you before, is not going to be more than 1 million barrel per day in a short time. But this is not going to make a very significant change. The main asset Iran has already in hand for coming back to the market is its floating reserves. People are saying, experts inside are saying it's about 60 to 80 million barrels, or maybe we have also heard some news that it's up to 130 million barrels. So this could be a very big shock to the market, and Iran can flood the markets with this amount of oil, and that could be a very significant change to the price.
Daniel, does Iran have that scale of floating capacity to be as high as 100 million barrels?
If to be honest, I think this 100 million barrels is not only crude. Maybe it consists of crude, condensates, and also products. But generally, it's not going to make any difference, because whether it's products, crude, or condensates, it's going to be somehow a good pulse to the markets to reduce the current prices or make a change in the trend. But in the long term, I think especially European refineries will be in trouble, and the prices are going to continue increasing. But at the moment, the fundamentals of the market have not changed, because Russian oil is available, and no significant change in the fundamentals has happened. So this decline in the somehow prices can be considered either as a correction, or the markets are waiting for a real physical change in the trend.
Neil, of course, in the aftermath of this invasion, and even well before it, the US and the Europeans to a great extent, but certainly the US government, was out actively campaigning across the world for alternative supplies, gas from Qatar and other possibilities that could alleviate Europe in this likely outcome. So there's been a lot of activity towards sort of supply support. The idea, obviously, OPEC plus. There now, your former colleagues at the International Energy Agency have signaled that they've done a 60 million release, but that they could yet do more. I'm curious, from your point of view, where the IEA role in all of this, and does it give sort of credibility, if you like, to this new supply, and could more stocks actually indeed come and be a part of this rescue, if you like?
Well, the IEA has been very cautious, and rightly so, in the announcement so far of coordinated stock withdrawals. And indeed, they've made it very clear in their message last week that the step they took at that point was a first step, and more drawdowns could be recommended if the circumstances require it. Now, on paper, there's 1.5 billion barrels of strategic stocks. That's on paper. Now, of course, there are logistical issues and quality issues in terms of getting any amount of oil that you decide to take from the strategic stocks and getting that to the market. And I suspect that with the move down in price that we've seen in this last day or so, if that were to be sustained, then I think for the time being, at least, there would be less pressure for a further drawdown of IEA stocks, because this is all about the price. The reason we're talking about the strategic stock draws is not because there has actually been a major fall off in supply, which is the whole reason for drawing down strategic stocks, because that's not yet happened on the scale that you might have thought it would. What we're talking about here is scary prices, and the United States is driving the reaction because of scary prices. Now that prices are a little less scary, then I think that the analysts in the IEA will probably be recommending that let's hold off for the time being, because stock drawdowns are one-off events. They're a succession of one-off events. Russian exports supply from anybody else is a daily regular flow, and stock draws are not a substitute in the long run for a regular flow. Just two other quick points on supply. While I got my note here in front of me, you mentioned that the United States and others have been going around the world calling on people to increase their supply. Well, until just a day or so ago, the United States seemed to be going around everywhere except it's in its own backyard in the United States. And yesterday at Zero Week, we had the US Energy Secretary essentially doing the First World War message from the British general to the oil people: your country needs you, your country needs your oil. Well, you know, they could have opened lines of contact some weeks ago, even before the Ukrainian situation when prices were beginning to rise. And lastly, on this issue, Venezuela, which I have an interest in, having worked for the state company, we're now apparently seeing the spectacle of the United States talking to a government in Venezuela that they don't even recognize as a potential source of increased supply. And then, of course, finally, there's the Iranian agreement, which Daniel talked about so eloquently a moment or so ago. So there's a lot going on the supply side. Now we've got the UAE coming in and signaling that at the end of this month, when OPEC Plus meets again, we could have a change in their stance. So things are happening on the supply side, which is part of the reason why prices have slipped back in this last day or so.
Well, let's go to Walter on that, because Walter, when the UAE minister gives you a call after this podcast and asks you to increase your supply, what is your answer going to be? Indeed, can OPEC Plus increase supply, even given the limitations across the group?
Well, look, I think it's a challenge. If I'm honest, the majority of the OPEC Plus suppliers are flat out and have been working very hard to get their production up to maximum levels, because clearly, you know, the fact that it's jumped to 120, dropped back a bit, it was the $80 that was driving that, you know, get that oil out of the ground. So I think there's a limited number of players, and I suggest read two who probably got excess capacity they can bring to the market. The rest of the OPEC players are probably flat out already, if I'm honest, and an immediate increase is unlikely. Give it a few months, then yes, but immediately I think it's going to be a challenge for most players to increase production above their current levels.
I mean, it does feel, Walter, a little bit to me that this development yesterday triggered the sort of souffle, if you like, from collapsing. It is the emergence of clarity coming out of the shock and awe phase of this conflict. The lines of predictability are starting to emerge. America's going to sanction Russia, but Europe isn't. The rest of the world are kind of going to continue to take Russian energy. So the lines are clearer. A week ago, even last weekend, perhaps, they were a lot more blurry. Would Europe indeed sort of take the nuclear option? Your thoughts on that clarity in this fog are starting to emerge, at least around the energy piece?
Oh, look, I think that's very true. There was panic last week, and I don't mean on the ground in Ukraine, clearly, but in the markets about what's going to happen, what's the impact of this going to be, and let's secure our supply ahead of that, and prices went up on the back of it. I think as the reactions have come in from the major players, I think we're starting to see that clarity, and that's starting to stabilize things a little bit, and I'm pretty sure that's what's behind a number of the announcements, is actually we've got to do something about this. It still is all, as people said, in the future. Today supplies are fine. It's what's going to happen in a month, 2 months' time if the conflict continues, and people are looking for reassurance that there will still be supply available to them in that period of time. And so I think that has helped considerably, but it's going to require more. And actually, at some point, there's going to have to be some increase in supply to match those words. Otherwise, again, confidence will go and we'll see another spike up.
Well, Daniel, just let's talk a little bit about the politics here. I mean, the reality is, of course, that OPEC Plus are due to raise quotas in the next meeting, or at least automatically as part of this agreement. UAE, Saudi Arabia, and one or two others, it's already built into this agreement that their quotas will rise. But Daniel, I wanted to get your thoughts on the politics here. I mean, we've got the Russians looking like there's a little bit of a gap between Russia and Iran in Vienna. And I'm wondering, Daniel, from your point of view, how is this Russian sort of intervention at the 11th hour, how would that be received in Tehran? Is their relationship so close that Iran would be on board with that? Well, how do you interpret that geopolitically?
Let me go back to a year ago when the Tay was released, somehow probably intentionally leaked from the Ministry of Foreign Affairs, that former Minister of Foreign Affairs, Javad Zarif, was speaking with a journalist about the problem they had during making the JCPOA agreement with the US and the UN 5+1. And Russia was 100% against JCPOA at the time, and later there was many discussions about whether Russia is strategically a partner of Iran or somehow it's on the opposite side. For years, for maybe decades, sanctions have weakened the supply side in OPEC, and OPEC was weakened by especially by the US because it could be considered as a threat to the global energy markets or to energy security as in general. But you see, by weakening the supply side, I'm not speaking about politics. I'm just speaking about weakening the supply side and weakening OPEC. I'm not advocating advocating the Islamic Republic policies, but I'm saying that weakening OPEC has resulted into empowering Russia and increasing their leverage in the energy markets, and eventually they use it as a weapon. Russia could not interfere or invade Ukraine by any other means than energy. What they have counted on is their energy capabilities and energy weapon against Europe, and by Europe, maybe to put more pressure on the rest of the world. So I think Russia has never been on a strategic ally for Iran, even during the first round of JCPOA during Obama administration. And I think at the moment they're on the same side, but things are getting more clear to Iranians and especially to the public, and people are figuring out that Russia as an energy producer could naturally consider you as a rival, not as an ally. And I think in the short time, Russia cannot do any special thing because the deal is a sort of deal between Iran and the US. So probably they're going to push Iran, and they have enough leverage. And yesterday there was news that a former parliament member, a very high-profile parliament member, Mr. Motahari, was saying that Russians have significant power inside Iranian regime. So I think they have some leverage to try to make obstacles in that deal, but they're not going to. This deal is going to be made even Russians don't want that. But I want to tell you some more.
They can be obstructive, and they will be, I suppose, in multiple platforms. Neil, looking to the window of time that we're now mid-March, the end of the winter coming in Northern Hemisphere, you were saying yourself, at the beginning of our podcast that indeed this is the first time you've been on when the light has been outside. So the seasons are changing in Europe. How big of impact did that have, do you think, at this crunch moment where supply demand could be move into a stressful place? What role does the time of year and the weather going to play, do you think?
Well, I think it's playing a very significant role. Overall, the winter season here in Northern Europe, certainly Northwestern Europe, has overall been pretty mild. We've not had that many cold snaps. Just a few weeks ago, this time last year, we had snow on the ground here in Paris. It was icy cold. So we're getting towards the end of the peak heating demand. My heating's off here in my apartment. And, you know, look, if Russia had invaded Ukraine in October and we'd had a really harsh winter, then God knows where we would be, frankly. But that isn't the case. They've waited until fairly late in the Northern Hemisphere heating season to take the action they've taken, and we're coming to the end of it. So it's going to make a significant difference in reducing the pressure of demand on supplies from Russia and indeed from elsewhere. So maybe we're catching a lucky break, if that's the way of describing it.
Walter, also we haven't talked really about China, the demand side of this story. Of course, the Chinese outlook is a little bit wobbly at the moment. They've predicted their own growth this year to be sub 6% for the first time in decades, and even lower as forecast by the IMF and the World Bank. How is the outlook there? They're your biggest customers from Omani oil point of view. Is it business as usual? Any cracks in that glass, so to speak?
Look, right now it's business as usual. Not seeing any changes in behaviours right now. But clearly, you know, the issues they have with COVID, the issues that presents to the supply chain, it's a concern. It's sort of been lost in the noise of the European conflict at present. Excuse me, everybody, I'm just recovering from COVID, so please forgive me for the cough. The challenge is going to be, you know, do they come out the other end of this and growth all guns blazing, or is there a permanent, you know, hitch in the growth in China? And we'll have to wait and see. But it's yeah, it's something to keep an eye on. But I'm not saying it's something that we're desperately concerned about yet.
Right. And just to follow up on that, given this windfall of income that the oil companies, operators, all of the industry on the upstream side at least are benefiting from, for better or worse, that's just the reality of where things go. The majors seem to be looking to return a lot of that capital in dividends and buybacks and so forth. Your thoughts on that spend? Is it going to go to the new supply E&P as one might have seen in the past? How do you see this moment being different than previous ones where that may have been the case?
Whoa, now there's a question. Look, I think there's a challenge in this myself, and I think there are a number of issues that affect it. I mean, clearly, you know, the windfall income from this is a large amount of money for organisations that have been, you know, struggling through the COVID period. At the same time, we're seeing massive inflation in all the countries using these hydrocarbons and pressures on government for windfall taxes. We've got the energy transition and the amount of money required to invest in renewables that's coming away from E&P. So I think there's a number of issues that affect it. My opinion is that the government should look very carefully at how they think about windfall taxes. And I think there is a case to be made for looking at a way of ring fencing some of this windfall income and reinvesting it in renewables. So it doesn't all go to E&P, equally so it doesn't go to the tax coffers, but it's forced to go into a way of investing in renewable energy. Because energy security is something that now suddenly has you know, run up the priority list dramatically. And people need to find a way of investing in that. I'm never sure governments are the best people to invest in this stuff. Business is maybe a better one to invest in it, but forcing them to do it in a certain way might be a valuable option.
Interesting. Let's go to the survey question and get the view of the room on some of the issues we're talking about. Brent futures fell 13% yesterday after the UAE says it will lobby OPEC Plus for more oil supply. The size of the move on modest headlines, you'd have to say, any other time, the UAE minister saying, well, maybe we might do this and maybe we won't. And in this instance, it was actually the ambassador of the United States, which isn't exactly, he's an important guy, I get that, but not necessarily a major policy maker. But nonetheless, the market reacted, and I'm interested to know your views. The size of modest move tells you that supply-demand balance actually is not that stressed, at least not now. Do you agree with that statement? Do you disagree with it? Welcome your thoughts on that. Daniel, the outlook vis-a-vis Iranian oil obviously made its way to the markets to a certain extent during this years of sanctions, and China, of course, one of the beneficiaries of picking up somewhat discounted Iranian crude. Your thoughts on that outlook for the Russian crude? We did a survey yesterday sort of asking, would indeed Russian crude regardless make its way to the markets once this initial shock period is over, given how successful to an extent Iran has been over the years. Your thoughts, Daniel, on that point, that indeed, regardless, Russian crude will get to the market. There'll be too many Asian customers looking for it.
Iranian oil and Russian oil are two very different stories. The first major difference is Iran has very easy and free access to open seas and warm seas. And Iran has a very significant, huge tanker company, which is considered as one of the largest oil tanker companies in the world, which Russia lacks. So I think Iran had the chance to send its oil to far seas in the Eastern Asia, maybe South America, everywhere, and to use S2S method to sell its oil with discount in the Indonesian waters and mix it with Malaysian oil, Iraqi or Omani oil. But I think Russia not only they do not have enough instrument for doing that, but also they're not experienced for doing so, because Iran enjoys its very long experience for going around the sanction. And the second issue is Iranian oil. Iranian oil's traditional market was Southeastern Asia and Eastern Asia, especially Korea and China. So they could easily make deal with Chinese companies to sell their oil. But Russian oil mostly goes to Europe, and the European refineries mostly use oil. So the only option they have at the moment is selling their oil to China by pipeline, and that would make consequences for China. So the whole issue would be much harder for Russians.
And just to follow up before we let you go, Daniel, put you on the spot. Your sort of prediction for the outlook of the Iran nuclear talks. We were kind of expecting, even like last weekend, it was going to cross the line. Are we that close, or is this development with Russia going to set us back weeks, months? What's your own sense?
I think the nuclear deal and Iranian oil export are two very different issues. Maybe they're allying, but they're two very different issues. Iran at the moment is selling more than 1 million barrels, and recently Iranian ports and maritime organizations have said that Iran is exporting more than 1.5 million barrels per day, which I have significant doubt about it. But seemingly Iranian oil is coming back to the track it used to be before the sanctions. So Americans do not need to make a deal with Iran if they want Iranian oil. They can just loosen the sanctions that they have done already. So the nuclear deal, based on my understanding, is going to be revived. But Iranian oil is already in the market and it's already in the increasing track. So probably even if the sanctions are not lifted, Iran is going to be able to sell its oil to China with a significant discount, which Chinese are going to be very pleased about that. And I think Iranians' participation in the oil market is going to be revived very soon.
Let's get the result of the survey and give Neil the last word today. They agree a sentiment on this, that indeed the indicators are, as Neil, you pointed out in your earlier comments, this market is, as of yet at least, not massively tight. Neil, I just wanted to get your closing thoughts on the structural change that this event in Europe is going to leave in its legacy, if indeed it does. I mean, we all were talking not so long ago that, COVID and remote working, and my goodness, the world's going to change. And I was in London recently, and, the city of London has never been busier. Everybody's back in the office. They don't even remember what the word remote working means. I'm wondering your thoughts, Neil, given this event. We have the Europeans announcing yesterday on our digest today, this idea of a federal bond to raise money collectively within the EU for financing energy security and so forth. Your thoughts on the legacy, perhaps the structural change. Is this a moment like 1974 with the creation of the IEA that just the structure of the market shifts? Your thoughts?
Wow, that's no pressure on that. Crikey, it's a huge subject. Look, let's assume for the sake of argument, that whatever does happen on the ground in Ukraine, Putin remains in power. If you assume that that is the case, then clearly we cannot suddenly walk back from all of the sanctions that we have imposed and all of the discussions that we're starting to have about moving away from Russia as a supplier of various commodities, whether it be energy or soft commodities. So a transition of a kind is clearly underway on the assumption that Putin remains in power. We can't suddenly turn around and start shaking hands with him again. So yeah, the European Union has talked about a bond. We're starting to talk, and indeed Walter talked about this very well a few moments ago, about the need to reinforce investments in the energy transition as we move to greater electrification in the energy space. All of these efforts need to be redoubled rather than perhaps walk back on in the future. So yeah, sure, you're right. This could well be a 1974 moment. Those of us who are old enough to remember that know that it did change the world in terms of our attitude to energy efficiency. It allowed investment in alternative sources of energy. So yeah, you've hit on something. We could well be in a 1974-like era. And yeah, there's an awful lot that's still going to happen. One final point, if for the sake of argument, Putin were no longer in power later this year or at some point in the reasonably near future, and there were to be a new Russian government, whether it be democratic or not, I suppose it really matters much, a new Russian government which returned to behaving within the norms of normal behavior, then maybe the impetus would diminish. But that's obviously a much longer shot.
Well, let's leave it there. I think the oil markets, if anything, in the recent weeks have been incredibly volatile. A 13% move now seems nearly like a daily occurrence. So as much as and as fast as it went down yesterday, could it go up today when suddenly it's like, well, actually, it was just the UAE ambassador and he was talking while he was going from his car to the Starbucks coffee. And actually the Saudi minister, who is the big cojones, hasn't said a word. And if he had said those words, perhaps then that might warrant a move, and hence prices could as quickly recover to where they were. So this is clearly volatility. We still see a very deep backwardation in the market, $15 or so over the front 6 months. So that's a very steep backwardation, indicating heavy demand on the front barrel. So let's see where this weekend goes. This will be a long weekend for us in terms of the podcast. We'll be back Monday morning to reflect on, every day. It seems like a week these days. So that's 4 days, that's 4 weeks. There'll be a lot to talk about. Have a great weekend, everybody. And may Ireland beat England in the rugby on Saturday. Gently, nothing overwhelming. 2 points will do us fine. But hopefully a good match. All the best, everybody.
Thank you very much. Thanks,
Bye-bye.
Sean. Bye.